Hey everybody, how's it going? This is Greg Gossett, and today is Saturday, September 3rd, 2022, and this is another edition of my weekend review podcast for Gossett Trading and Mentoring. So, hope you're doing well. Boy, what a wild week we had in the market, huh? Lots of big reversals. Kind of frustrating, but in bear markets, this was what happens. We open up higher, we sell off. And when we're in bull markets, often we open lower and close higher. So, we're definitely in a challenging market here ever since Jay Powell came out and discussed that there may be some pain ahead, and the market has repriced based upon those comments. It's been a staggering move down. So I hope you are staying safe. I hope you're following your rules, position sizing correctly, and being particular with your entries and your setups, and more importantly, adhering to your rules. So, wild week. Didn't do too bad this week. I'm glad. I had some shorts. We'll go over those in a minute. Still kind of battling the COVID I caught, so hopefully I won't cough too much during the podcast today. So this is the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my trades from last week. We'll talk about when I bought them, why I bought them, and how I am going to manage those positions going forward. After that, we're going to switch gears. We're going to talk a little bit about trader psychology, always the most important skill in trading, in my opinion, really is. I mean, it's really what it comes down to, is the ability to create a plan, follow the plan, not let your emotions get amplified and get in there and mess up what the plan was. Before you take a trade, that's about the only time that you're really objective. And once you have a trade on, boy, your mind can start playing tricks with you. So often in my trading career, just following the process would have been better for me than to go, I think I'm getting out because of this or that. Like, it's just, it causes a lot of stress. And really, if you have a good trading approach, and there are so many different good trading approaches, it all has to do with risk to reward, picking a level, position sizing correctly, getting out quickly if you're wrong, and then having the guts to stay in if you're right. I've looked back at my trades for the year, and over decades, I've been trading almost 28 years, and it's almost always the case. So if I could give some good advice to people, just come up with a good a decent trading approach that factors in risk to reward and at levels, and stick with it. Sometimes you are going to have outsized moved your way that you would never dream of. It's true. It's really true. So that's why we're going to talk about trader psychology. After that, going to read a poem from my good friend Frank, trading poem, always spot on, pertinent to what's going on with the market. And then after that, I have gone down through my entire watch list, and I will be sharing with you some potential trades that I'm looking for in the upcoming week. Usually with my trades, the price either has to go lower to find some support below, or it has to go higher to show me that it has some upward momentum. So I have identified, I think I have about 10 or 14, not sure how many, but we'll go through each one. I think there is some opportunity here in this market. Of course, we're extremely bearish, but for me, that's kind of a counter indication because there's a lot of news out there. Of course, we all know about the Fed, and we all know about the rising interest rates and so forth, but that is priced in the market. Doesn't mean we can't go further, but when we have big moves down like this, I always feel more comfortable in taking my positions because I know everyone's super scared, and usually that's how it works. Usually when everyone's scared, you're near the low. I'm not saying that I still have to base my trades and getting in and getting out on my stops, but there are some significant levels here. So, hopefully next week we can get a rally. I don't know. I'm wrong often. But hopefully when I'm wrong small, and when I'm right, I can be right bigger so I can pay for all the little wrong trades. But I am somewhat bullish here for a couple different reasons, and I will explain those as we go through the charts, okay? But first of all, I have to run the US legal disclaimer, so hang tight. I'll be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, well, let's get to it. First on deck are the Qs. Now, down slightly on this trade, I did buy QQQ back here on 8:30 when we came down, we touched the top of this order block, and we are in this fair value gap. Now, this is something new I've been using. That I've been taught by my really good friend Ava at Presence Trades. Please follow her. She's one of the best traders and just so solid as a trader. And boy, does she study. And this is what she's taught me, over the last 4 months, something like that. And I really like it. And by the way, if you go to ICT Mentoring on YouTube, Mike, that's his channel. Excuse me. And I would really suggest that you do, because these fair value gaps and these order blocks are something I've been incorporating in my trading, and it's pretty amazing how they work. But essentially, we have an order block down here. This is the big move down before we had a structure break to the upside. And on the day that I bought it, we basically touched the top of that, bounced off of it, which is a good sign. So I went long here at 299.10. My stop is a close below this pivot here of 293.94. And interesting, on Friday, we got down to the bottom of that order block, almost to the penny, and bounced. So as long as it stays above 293.44, then I will continue to stay bullish on the Qs. Of course, whenever I buy a new position or enter a new position, I have two stops. I have an end of day stop, which is a close below this pivot. And then I also have an emergency stop, which is 2 ATRs below my entry. And what I do is I take my maximum allowed loss. A good rule of thumb is like 1%. So if you had a $100,000 trading account, 1% of that would be 1,000. You take 1,000 divided by the value of the 2 ATR. That would show you how many shares to buy, so that if it does move down 2 ATRs from your entry, you know exactly how much you've lost. And 1% is not fun to lose, but it's not going to destabilize you or really, hurt your account too much. And so come this coming week, if it closes below 293.54, that will be my end of day stop. Of course, if it does come down here to my maximum allowed loss, I will just go ahead and get out regardless of the time of the day, because usually on my end of day stops, I wait for the end of the day. But if it hits an emergency stop, I have to get out whenever. One thing I noticed on the Qs here, we had a big reversal on Thursday. And again, you can see it touched the bottom of the order block and reversed on pretty significant volume. But on Friday, of course, we had that great gap up. It was sorry, it was really looking good. And then we had these huge reversals. We have had some massive reversals lately. We had one here on that particular day. Of course, we had one here, and we had one again on Friday, which is frustrating. When you wake up, you have good positions, and then the whole rest of the day just sells off. But the volume on Friday was quite low, which, a reversal bar up on higher volume is a good sign. A reversal bar down on lower volume, well, it's no fun, it goes down. but it did hold the levels, which is important to me, and it was on lower volume. Of course, we have Labor Day, and probably large financial institutions, large investors in New York probably were taking it off. So my thinking here is that the market move was exacerbated to the downside because of the low volume. Doesn't mean we can't go down, but to me, it was a bit of a good sign. And so anyway, sticking along with my cues here. Let's see, I entered right there to there. So yeah, down 1.1% on this trade so far, holding my end of day stop. So I am continuing to hold. Apple is a closed position. Glad I got out of this when I was supposed to. I did buy Apple back here on the 29th of August when we had an intraday rejection of the 200-day moving average. I was very patient waiting for that to come down. I thought that there were going to be some buyers here, and it went under 200, went back over 200. Of course, I have my emergency stop down here. My end of day stop is where? Well, it's just the opposite of why I took the trade. If I took the trade with an intraday rejection and close back above the 200, if it closes back below the 200, I'm going to get out. So I got in at 161.11, got out at 158.80 for a loss of 1.46%. And glad I did. Next day, it rallied up, reversed back, big time up on Friday, reverse down. So this trade is closed out for a loss, but it's a good example here of picking a level, putting on your position, having your emergency stop, position sizing correctly, and if it closes below your line in the sand, which for me was the 200, to get out. So in at 161.11, out at 158.80 for a loss, but glad I took the loss, right? Because it's 155.81. So Q's currently open with a negative 1.1% loss on the trade. Apple closed with a, excuse me, 1.46 closed position on the trade. And then Tesla, well, I'm glad for Tesla. I did go ahead and short Tesla when back here on the 25th of August, we had a lower high. See how this high is lower than this high? We had a lower high close back below the 200 and a V1. Oh, no, excuse me. It wasn't a V1. It was a V2. Bar 1, 2, 3, close below and close below the 200, and this trade has worked out nicely. The next day, during the day went above the 200, but I wait till the end of the day, and it has just come down and down and down and down and down and down. So this line here, this is 1.5 ATRs from my entry. So I am in trailing stop mode. Once it moves up or down, depending if I'm long or short, if it moves 1.5 ATRs from entry, then I go into trailing stop mode. So I am in trailing stop mode right now, which basically means that if I get a close above the previous day's high, I will exit half of my position. Of course, I always take partial profits whenever a stock goes my way, whenever it moves 0.45 ATRs from the previous day's close in my direction, I take off. So the next day, yes, I took off profit targets because it moved that much. I took off 10%. Next day, did hit another profit target. Next day, did hit another profit target. Next day here, did not. On the big down day on Thursday, I hit another profit target and one here as well. So this has been a good position from entry to current price, about 9.98%. So I'm glad I had some balance in my positions. I wasn't just short or I wasn't just long. So the Qs and Apple, of course, those are slightly down, but Tesla made up for it. So not a bad week. And yeah, that was a really nice trade on Tesla. Okay, before we start looking at the potential trades for next week, do want to talk a little bit about trader psychology. This is from Anthony Crudell, great futures trader, nice following over on Twitter. He has good advice, good post about trader psychology. I really like this channel, and I would suggest that you click and subscribe at Anthony Crudell over on Twitter. Anthony says, if you're not performing well in the market, it's important to know where it stems from. I always ask myself these three questions. Is it me? Is it the market environment? Is it my strategy? Getting to the root of your struggles requires an honest look inside yourself to fix it. And it's so true. This past month and a half, I have really had a challenge with my day trading. Like, honestly, I went 3 years with not one monthly loss for 3 years. Just in the groove, doing my thing. The last month and a half, not so hot tamale. And I have really, the reason that this post spoke to me was that it's so true with me. I had to go, okay, what's going on? Is it something different in me, my personality, and how I trade? Is it the market? Is my strategy just not working for this market? And honestly, I think it was all three, to be honest with you. I think my strategy was off a little bit based upon the market. I think there were some things with me, with my life, and some things that had come up relationship-wise and health-wise and things like that. And then we have a crazy market. So, if I have to be honest with myself, they're probably all of them. Some personal stuff, some health stuff, the market, and the strategy. So I have made some changes to my trading, which have helped actually, because last week I had a decent day trading week and pretty good swing trading week. And that's another thing I want to mention as well. I'm a big proponent or fan of trading multiple time frames, and for years and years and years, day trading was just automatic, right? And this year, prior to these last couple months, my swing trades were really bad. I mean, a lot of people's swing trades were really bad, but the day trading really helped mitigate the losses and had some gains, right, from the day trading over the swing trading. And I did have a lot of people say, you should just maybe day trade and not swing trade. And it's like, yeah, I don't think so. I mean, in this market environment, in hindsight 2020, yes, that is true. But recently, my swing trades have been the profitable ones and to help mitigate the losses from the day trades. But it seems like things are turning around. The day trades and the swing trades have been getting better. And I think it came back down to what Anthony was talking about, asking yourself the questions. Is it me? Is it the market environment? Is it my strategy? And like I said, for me, it's been about all three. So I've made some changes in all three, and it's been good. So one more time, if you're not performing well in the market, it's important to know where it stems from. I always ask myself these three questions. Is it me? Is it the market environment? Is it my strategy? Getting to the root of your struggles requires an honest look inside yourself to fix it. And I think that's the key, an honest look inside yourself, objectively, and getting your ego out of the way. And then when you identify what it is, making some changes. So this one really hit home to me, very pertinent to me currently with trading in this market. So Anthony, thanks a lot. And please subscribe to Anthony at Anthony Crudell over on Twitter. Okay, let us take a look at a trading poem from my good friend Frank. Please follow Frank at FrankOD over on Twitter. He's a great trader. He's a great poet. He's a great musician. He's a great journalist. And, when I had the live stream, he was in there every day with a poem, and always appreciated seeing him and always liked these poems. And they're always helpful to me. Let's see what Frank has to say today. Excuse me. The market comes with so many questions. Experts with thoughts and lots of suggestions. Too much information creates a ball of congestion. Traders are people who need space and reflection. And the reason I like this poem so much is this. Experts with thoughts and lots of suggestions. Boy, everybody has an opinion. You watch CNBC or whatever, which I would not recommend that you do. I swear. I'm really, really adamant about that. I think they have a narrative that affects people's trading. And, a good friend of mine, Kamal, who a lot of you know from the live stream podcast, told me, he's like, I just don't watch TV. I don't want to know anything about it at all. Nothing at all. I don't want any narrative in my head. I just want to trade my signals. And I think it's right. So let's read it one more time. The market comes with so many questions. Experts with thoughts and lots of suggestions. Too much information creates a ball of congestion. Traders are people who need space and reflection. And, another point here, I have a lot of people talking, or I've seen a lot of people so bearish, the market's so bearish, and that actually makes me bullish, because experts with thoughts and lots of suggestions, usually I believe those experts are wrong. And a lot of experts now are calling for, the low, taking out the June lows, which may happen, but it's so pervasive out there in the ether and the zeitgeist of what's happening in the market that it actually makes me bullish at the moment. All right. Well, like I said, I've gone down through my watch list. I have identified some things that I'm looking at, and let's go to Apple. I did get out of Apple, but I am a little interested in Apple here at the moment. No, that's Tesla. All right, here we go. Technically, Apple did have a valid signal on Friday with a intraday rejection of the 300-day moving average. The 300-day moving average is 155.80. It's 155.81, so technically it did close above. Actually didn't notice that. I may have added that on Friday if I would have noticed it, but I do have the Q position, so it's okay. But coming into this current week here, I think probably the most comfortable I would be to enter Apple would be a rejection of the 30 RSI. We're at 37.89, so it is significantly far away. We're down here right now we're at the, let's see, 1, 2, 3, 4, 5, almost to the fourth ATR channel. 30 RSI would put us somewhere down in this range. Kind of an extreme range of like the -6 ATR channel. That is that's a big level for Apple to ever get to the 6 ATR channel above, which sometimes it has, or the -6 below. But I like the confluence of an under 30 over 30. I would definitely be a buyer of Apple with an under 30 over 30, no doubt about it. First trade didn't work out, and that's often the case. But when you have a trade that doesn't work out, that's fine, but it sometimes precludes people from taking it the next time. But I don't know if Apple's going to get down to under 30 over 30. Of course, I don't know that, but if it does, I definitely would be a buyer, either a close under 30, close over 30, or in intraday rejection of the 30 RSI. And right now it's at 37. Actually, let's see. I have this little tool here on my trade navigator, which is pretty helpful. I can see Monday 30 RSI would be, I kind of eyeballed that, but I was right on, would be at the 6 ATR channel, somewhere about there. Sorry for the cough, everyone. Yeah, right about there. So yeah, that was about right. So that would be 149.15. That's only though if that happened on Monday. If it took a few days, it would be a different level. But under 30 over 30 on Apple, I would really like it. That would probably dovetail with a nice 50% retracement on the weekly here. Alibaba been fairly strong here. It's had some resilience. We made a double bottom here. We changed market structure here by moving it back above. We are in a fair value gap right here. What I'm looking for on Alibaba is the bounce at the order block. Here's the order block, the top of the order block, 90.20. If we were to come down, bounce at that order block and close back over it, that would be definitely an entry for me, and my end of day stop would just be a close here below the lows. And just want to point out, and I'll talk a little bit about this at the end, but in this podcast I do go over some of the strategies and what I'm looking for. I don't have time to do the entire A to Z explanations of everything, and just like I said, I'll talk about it at the end, but I do teach private one-on-one lessons in the evening time. I love to teach. I'm a great teacher. I've taught so many people all over the world all the 5 trading strategies that I use. So in this podcast, I do my best to just kind of go over the basics, but if it seems confusing, I will explain it to you all if you do the course with me, and it's a 15-hour course. So I'll talk more about that at the end. So back to Alibaba. I would definitely, for one, Alibaba has been much stronger than the rest. It's kind of in its own universe, but this is a very good level here, the top of the order block, and it has shown some relative strength compared to the rest of the market. So next week, if we do bounce off this 90-20 level and close back over, that will be my entry on Alibaba. Goldman Sachs has come down. It's been a little stronger relatively speaking. We closed below the 200-day moving average. We're kind of pulled away from it. We got way above it on Friday, got right to halfway of this big down bar, which is not surprising. But for Goldman Sachs, what I would be looking for would be some kind of close above the 200-day moving average, and that's what I'll be looking for Goldman Sachs next week. Coca-Cola, almost bought this on Friday. We've had a substantial move down, obviously, but we're to the 200-day moving average and the negative third ATR channel, and we're to 34.19 RSI. I didn't buy this because we didn't reject the 200, but if we open up down on Tuesday, because Monday is a holiday, if we have some kind of test below the 200 and then close back above the 200, I would definitely be looking to buy Coca-Cola, KO. I think it'd be a good risk to reward ratio. Obviously, big established company. If the 200 does fail, then if we got down to the 250, then that would also be another level that I would look at. So for Coca-Cola, some kind of intraday close under, close over of the 200-day moving average would be my entry. And or if it slices through there, next level that I would be looking for is some kind of intraday rejection or close under, close over of the 250. MasterCard, well, lost the 200 and just pulled away. So what am I looking on MasterCard? I'm looking for an under 30 over 30. We're at 32.80, so we are definitely within striking distance of MasterCard. So a intraday rejection of the 30 RSI or a close under, close over 30 is what I'd be looking for on MA MasterCard. McDonald's, this is one I've been waiting for. Similar to Coca-Cola, I've been waiting for McDonald's to come down, test the 200-day moving average. What is that? 48 to 6 points away. Doesn't mean it's going to have to get there. But the last time we tested the 200, moved up nicely. And when I'm looking at moving averages, I want to look back and see what moving average was respected. And this was respected. And here it got close, bounced. Does it mean it's going to get to the 200, or does it mean it's going to hold? No, it does not. But next week, first level, that rejection level that I would be looking for is the 200. If it fails there, I may try it at the 250. If it fails there, I may try it at the 300 as well. Microsoft, wow, look at that. People say sometimes moving averages don't matter. Well, look at Microsoft. Got right up to the 200, rejected it, never closed back above, and then big move down. Do I mean I want to short this? No, I do not. We have a couple things going on with Microsoft here. Here's an order block. Here's the top of the order block. Here's the bottom of the order block. On Friday, MasterCard did go below the order block, close back above, lost it here. But look, we're to 31.77. So we are close to we're close to a 30 RSI, which on a stock like Microsoft, historically buying an under 30 over on Microsoft is pretty good. I mean, look at this. Microsoft's down 12.78% in 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, in like 2.5 weeks. That is a substantial move. But the order block down here in relationship, in conjunction with a 30 RSI level, let's take a look over at the weekly. What's happening here? Nothing. Okay. Also on the weekly would dovetail here with a -1 ATR channel, which is also a level. So what is going on? Anyway, hope this is working. But looking for Microsoft under 30, over 30, and don't know what's happening, everybody. I got strange sounds coming out of my computer. Okay, next, Netflix. Netflix has been relatively strong. We've come down, we've kind of moved sideways. It's much stronger than the market because it's moving sideways. It hasn't had this big move down. So what I'm looking for on Netflix is a 520 crossover. Haven't talked about crossovers very often, but Netflix does backtest well with the 5 EMA crossing over the 20 EMA, and it's the my favorite type of crossover pattern when you have sideways motion. Sideways motion tends to lead to trends. I don't like to buy crossovers if they've moved a lot prior to the crossover. Just the move caused the crossover. But this sideways motion here, I really love. And so if I get a 520 crossover next week on Netflix, and especially because of the sideways motion, I will definitely be getting long Netflix if we get a 520 crossover. NVIDIA. Well, NVIDIA has just been under so much pressure. Some news came out about NVIDIA not being able to send some of their chips to China. Look, we're at a 2874 RSI, so we are under the 30 RSI level, which is not good. But if we could get back over the 30 RSI, I would really be interested in that, because if you look back in time on NVIDIA, way back in time, a significant low on NVIDIA here before it had a meteoric rise up was right here at this price. Take that out in time. See, that's exactly where we bounce. Doesn't mean it can't go lower, but I like that there's significant support over here in the past, and I also like or I shouldn't say like, but I like that it dovetails with a potential under 30, over 30. So because of the support we had way back then, if we get an under 30, over 30, I will buy it. With the caveat of, if it goes from 28 to 40, I'm not going to buy it then because the risk to reward isn't good. So I'm looking for a gentle kind of bump back over the 30 RSI. If I had a V1 or a V2 in conjunction with that on high volume, that would be good. Speaking of volume, look at the volume that came in on Thursday off the lows, Friday down, but look at the volume, low volume. So that's what makes me bullish. So I really am looking for NVIDIA here with an under 30, over 30. Looks like we have a dividend coming up as well on 9.7. Qs. Okay, I am already long the Qs here, but just really what I wanted to show you here again was just the low volume on Friday compared to the up move on Thursday, the reversal on Thursday, and the low volume here. So I already am long that and happy with that position. If it closes below this order block here, I will get out. There are also some fair value gaps down here and other order blocks that I will be looking for. If it loses it, mainly right here at what is going on with my computer? Mainly here at 287.56. Boy, I don't know why my computer is doing this. Silver went under 30, over 30. I don't like how it closed. It gapped up. We had a close below the open. So I didn't buy this. It's a 32.13. It's decent. There's no doubt. It's a good risk to reward ratio as far as the RSI. But because I didn't buy it, what I would be looking for would be another under 30 and then back over 30. I like higher lows, whether it's 200, buying off the 200, shorting off the 200. V1s, V2s, higher lows are the best for me to get long, and also 30 RSI. So if we went under 30 again and then back over 30 and it was a higher price than this Thursday's low, then I would definitely be looking to buy silver. I mean, silver has had a significant move down already. Doesn't mean that it can't move down further. But that's what I'm looking for on silver is a retest of the 30 RSI and back over to give me more confirmation. SPY, well, SPY looks just basically like Qs. We did hold the bottom of the top of the order block on Thursday. We tested the low of the order block on Thursday as well. Moved up to the 50 SMA here. We closed below it. We tested, pulled back, tested it almost again, very close to the penny on SPY, and it moved back down. But getting over the 50 would be a good start. Not buying anything here on SPY, but just wanted to highlight that we did hold the order block, which is a decently good sign for the market. USO, well, I've been waiting patiently on USO. I've been waiting for a test of the 200-day moving average. Let's see, did it close below the 200 on Thursday? Oh, shoot. Boy, something's going wrong with my charts here. Or something. I don't know if you can hear that noise, but I can. I hope it hasn't crashed. Okay. Anyway, suffice it to say, USO is at a 41.72 RSI. If we get it close under 200 and back over the 200, that would be an entry, and or if we had an intraday rejection of the 200, that would give me a good risk reward ratio. If we have a big pull, if we have a big move down, it just slices through the 200. My next level would be looking at this combination and confluence here of the 250-day moving average and the negative third ATR channel. So first stop is a test of the 200. I would get long oil there. If it loses that, next stop would be a test of the 250. And then lastly, something that's kind of interesting here on this, we have been going down, obviously in the market, right? But look at VIX. VIX has also been going down. Seem a little strange. You would think that if the market was really concerned there with puts and so forth, so that would increase the price of the VIX. But the VIX going down with the market going down, again, that's one of the other reasons I'm thinking that I'm getting a little bullish here, because one, the sentiment of everyone is super bullish. We've come back down to on the index to some of these value gaps. We've held some of these order blocks. And in addition to that, the VIX has been going down as well. So I'm not really looking for an entry on VIX. I just wanted to highlight to show you that even though the market's been going down, the price of puts have not been going up in relationship to the VIX, because the VIX would be higher because it's based upon puts going up. Interestingly enough, on Friday, this was a legitimate entry under 30, over 30. I did not take it. So anyway, as I mentioned kind of at the beginning, I do teach private one-on-one lessons in the evening time. They're one-on-one lessons. I think it's the best way to learn my course, and we do it by Skype. My course is 15 hours. There's 5 sessions. Each session is 3 hours. I take you through all the 5 different trading approaches that I use step by step. It's a great class. It does cost $1,750, but I promise you it's worth every penny. You are going to learn a lot. So if you are interested, I have put my email in the link of this YouTube video, and all you have to do is reach out to me and say, Greg, I'm potentially interested in taking your course. I'll reply and say, hey, that's great. How about we do a Skype call? The Skype call is free. It's not a sales call. I'm not going to try to sell you on anything, I promise. I just want to get to know you a little bit better, see what you're looking for, see if my course is going to provide what you're looking for, and see if we would be a good match of teacher and student. And it's also a good time for you to ask me any specific questions about the course. And when we're done, you'll never hear from me again. I'm not going to reach out and say, hey, do you want to take the course? I promise you, that'll be up to you. And one day if you wake up and you say, that made sense, I think I want to take the course, just email me back and we'll get it scheduled. And I promise you'll be happy that you took the course, really. And then secondly, I do have a really good online course called the Deep Dip by Stock Trading Strategy. I have it on udemy.com. It's very affordable. It's like $12 or $15, but don't let the low price fool you, because there are 26 videos. There's 9.5 hours of videos. There's 15 study guides. I've sold so many of these courses around the world and got so many good reviews and feedback. And I take you through step by step exactly how to trade the deep dip buy strategy. And that's the market that we're in right now. So it's very applicable. And again, the link's in the description if you want to check that out. And then lastly, if you like this podcast, if there's anything that's helpful, that you found helpful in it, all I ask is that you'd hit the thumbs up button so that YouTube know there's some valuable content here. They can get it out, share it more. A lot of people could use some good direction with trading, and that's what I try to do here. And lastly, I always like to leave off with this. Please go out and try to do something nice for another human being today. Please try to go out and do something nice for an animal today. Humans appreciate an act of kindness. Animals appreciate an act of kindness. It's good karma, and it really would make the world a better place. And hopefully one day, if you're, having an off day or you need some help, there will be someone there to offer you the act of kindness as well. So anyway, it's a long weekend. Markets closed on Monday. Hope you get out, have some fun with family, maybe do some exercising, do a little charting. Never hurts, right? On your time off to do a little charting and getting prepared for the next week. But I hope you have a happy, healthy, safe, long weekend. And if you have any questions, just put them in the comments below. I'll do my best to get back to them. And I think that's it for right now. So I have to run the U.S. legal disclaimer on the way out. But thanks again. Appreciate you spending and investing your time here. Hope it's helping. And we'll see you next weekend. All right. Take care, everyone. Thanks a lot. Bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.